Hey, it's Dinko, the realtor. Wells Fargo is done with the housing market. They are no longer going to issue any housing mortgages any longer. This is just nuts. I mean, let's take a look at this here real quick. Wells Fargo, once the number one player in the mortgage industry, is stepping back from the housing market. They're saying, hey, we're done here. We no longer want any part of this. Check this out, what their chief executive had to say. This is the part that we have to really focus on. And here it is. We are making the decision to continue to reduce risk in the mortgage business by reducing its size. If the housing market wasn't going to go into a downturn, if the housing market was going to recover, and all these buyers would just come out the woods, why would they be getting out of the business? And more importantly, they're making the decision to continue to reduce the risk in the mortgage business industry. We really have to pay attention to that. And this is why I've been saying we have to wait until March. That's when we're going to have a lot more data to analyze what's going on with the housing market. Don't pull the trigger too quickly. Wait until March and assess with the data that we have there, because it's going to be more current and it's going to have more data of what's actually going on in the economy. So if you like this channel, make sure you subscribe to it down below so you're notified. That way you have all the financial information to make the best decision when to buy in 2023. And of course, if you need to get a hold of me, my contact information will be down below. I work along the whole Wasatch Front, of course, the Salt Lake Valley, all the way to Provo, the Lehigh area, all the way to Ogden, Bountiful, Layton. I got you covered. So if you need to get a hold of me. Now, this is the other part that is very, very big time news. And this can send shockwaves even further throughout the housing industry. It's the third party loans and servicing. So not only were they one of the biggest issuers in mortgages, they also are the biggest servicer. So the way the mortgages work is you have ABC lending. They give you a loan, you find a home, you buy it, they approve you, they actually sell that in the secondary market. So majority of the lenders, they don't service the loans, they don't keep them. They sell those loans within a month or two of originating them so that they can get more money to originate newer loans. That's how they make money. Well, Wells Fargo is getting out of that business. So Wells Fargo, the correspondent channel, its significant pipeline of business for the San Francisco-based Wells Fargo company, bank, whatever, one that became larger as overall loan activity shrank last year. In October, the bank said 42% of the $21 billion in loans it originated in the third quarter were correspondent loans. That means that they bought these loans. They didn't originate them. They bought them off of, ABC Lending, originated a loan, and they sold it to Wells Fargo. Now, the other thing we have to look at this article is what they're stating right here. The sale of the mortgage servicing rights to other industry players will take at least several quarters to complete, depending on the market condition. So they're actually trying to offload the mortgages that they're servicing right now. I mean, they're trying to offload, it looks like, as many of them as possible to reduce risk. Well, why would that be? Because they're thinking there's going to be people defaulting here in the future and they don't want to be stuck with these bad loans? Could be a possibility. Let's take a look at this over here now. This is something we have to take a look at here. Just 1 second. All right. So we see here 72 million for the second quarter and 40 basis points. This is actually the car loan industry. So they backed out or are actually tightening on their car loans. The car bubble is just something that we definitely have to pay attention to as well. And what they did is, with the higher loss rates on certain auto loans originated primarily in the latter part of 2021, contributed to the loss, to charge-offs and delinquencies in the portfolio. So not only are there issues with the housing loans, there are issues with the car loans. And this I've been stating in multiple videos, multiple times. We have to pay attention to what's going on in the car bubble, because the loans that were issued during the pandemic time in the car industry resemble the 08, 09 subprime mortgages. And of course, it's not going to be as big because cars are cheaper, But cars depreciate, and they really, unless it's a classic, they don't ever gain value over time. They just keep depreciating. Well, there's these loans, these subprime loans on cars that are going to lose further and further value, and they were extremely overinflated. And cars, unlike houses, will never regain that value once they start dropping again. And they are dropping. So if we take a look at this article over here, I mean, this is all the stuff we have to pay attention to. It's not just about housing. This is why I've been saying March is the month we have to wait for. Now, used car prices slumped 7% in the third quarter. That's the worst decline since the global financial crisis. The 7% that the car prices have dropped is not the big part of that paragraph. It's the global financial crisis. In 08-09, the US housing market caused a global recession by itself. Right now, we are in a global financial crisis. I mean, the data is showing us that the market hasn't stabilized. So we have to keep paying attention to it. Now, if we go over here, pull this other one up. There we go. Big banks set aside billions as they brace for a downturn. They're setting aside billions. I mean, look at that. Billions of dollars being set aside for the downturn. And they're telling us that everything's going to be great, and we just have to keep buying these cars, these houses. Look at this. The Wall Street warns trouble brewing in the auto loans as prices dip. I mean, everything here said that the higher rates for loans that originated. So Wells Fargo, here it is. They acknowledged that this was even months ago. They acknowledged that they set aside that there was bad car loans and they were preparing for them. Now they're out of the mortgage industry. I mean, I don't know. I don't think anything's stabilizing. I don't know where people are getting that information, but so right here, Wells Fargo and Co. said the higher loss rates for loans that originated later last year contributed to the increase in write-offs for the period. Ally Financial Inc., the country's second largest auto lender, saw charge-offs for retail auto loans quadruple in the third quarter. Quadruple. And then Fifth Third Bancorp said it's pulling back on its originations. And there was another part here with Wells Fargo. What they did is they have stricter underwriting processes now for their car loans. So they're tightening everything. They don't want to be stuck with all of these bad loans. We have to pay attention to this. Carvana is really close to filing bankruptcy. They were the third fastest company to ever get onto the Fortune 500 list. After Google and Amazon, they are now on the brink of bankruptcy. They have so many cars. I mean, they're losing hundreds of millions of dollars every single month because they have a depreciating asset, and the cars, they haven't even been able to liquidate all of them. So they are on the verge of filing bankruptcy. And all those bad loans, somebody has those bad loans. A lot of car dealers buy cars based on loans. They don't actually buy them for cash and then they resell them. So let's just keep paying attention to what's going to happen. I'm going to keep y'all up to date here on what's going on in the economy. That way you have all the information you need to make the best decision for you and your family in 2023. If you need to get a hold of me, contact me down below. My phone number will be there. I work along the whole Wasatch Front, Salt Lake, Provo, Lehigh, Bountiful, Layton, Ogden, wherever you need me, I'll be there for you.